Want passive income without buying property or dealing with tenants? Mapletree Industrial Trust, or MIT, is down. But is this the perfect buying opportunity? If you're serious about dividend investing in Singapore, this video could help you make a smarter decision. So before we begin, do us a favor. Like this video so more Singaporeans can learn how to grow their income, subscribe to Wealth for You, and stay till the end to hear how Fed rate cuts might flip the game for MIT investors. Disclaimer: this video is for educational purposes only and is not financial advice. Please do your own research or consult a licensed financial advisor before making any investment decisions. Chapter 1. What are REITs? First things first, what's a REIT? REIT stands for Real Estate Investment Trust. It's basically a company that owns income-generating properties, like shopping malls, offices, warehouses, or data centers, and pays you, the investor, regular dividends from the rent it collects. So instead of buying one whole condo, you buy units in a REIT and earn a slice of the rental income. Pretty sweet deal for passive income seekers. Chapter 2. Introducing Mapletree Industrial Trust. Now let's talk about MIT. No, not the university. Mapletree Industrial Trust is one of Singapore's top industrial REITs, and here's what makes it special: number of properties, 141 properties. Where? Singapore has 83 properties, North America has 56 properties, 13 of them via joint ventures, and Japan has 2 high-tech assets. MIT has gone international. Chapter 3. What kind of properties does MIT own? Now you might be wondering, what exactly does MIT own? Well, MIT isn't just some boring warehouse landlord. Its portfolio is a surprisingly exciting mix of modern industrial spaces and cutting-edge tech infrastructure that support both traditional industries and the fast-growing digital economy. In Singapore, MIT owns business parks, where innovative companies and tech firms operate high-tech industrial buildings, think clean rooms, R&D labs, and precision manufacturing spaces, and stack up and ramp up factories, great for logistics, warehousing, and light production. These spaces support Singapore's buzzing electronics, biomedical, and advanced manufacturing sectors. In North America and Japan, MIT is going digital. Its focus there is on data centers. These are essential assets that power everything from Netflix streaming to ChatGPT and cloud computing. MIT's data center strategy positions it to benefit from megatrends like AI, cloud, and digital transformation, all of which are growing at lightning speed. Chapter 4. Portfolio Snapshot. All right, let's zoom out and take a look at MIT's full portfolio performance. The total property value stands at about 9.04 billion Singapore dollars. That's some serious real estate firepower, diversified across Singapore, the United States, and Japan. Now, the overall occupancy rate is 91.6%. For Singapore, it's 92.9% and trending upwards, which is a great sign. Over in North America, it's 88.2%, which is a slight dip, but still pretty solid. When it comes to rental reversions in Singapore, MIT achieved a positive 8.1% increase in rental rates on renewed leases. That basically means tenants are willing to pay more to stay, and that's a strong indicator of demand and pricing power. Bottom line, MIT owns a solid future-ready mix of traditional and tech-enabled properties. Whether it's supporting biomedical labs in Singapore or data centers in the US, this REIT is really embedded in the real-world infrastructure behind the digital age. Chapter 5. FY 2024-25. Financials. How did MIT perform? Now, let's take a look at how Mapletree Industrial Trust held up over the past year, the financial year ending March 2025. Despite facing a tough environment with high interest rates, MIT still managed to put up a pretty resilient performance. Gross revenue came in at 728 million Singapore dollars, which is a 2.1% increase from the previous year. So, the REIT is still growing its top line steadily. Net property income, which is basically rent collected after property-related expenses, also rose by 2%, hitting $531.5 million. Now, here's where it gets interesting for investors. MIT made 397.6 million Singapore dollars available for distribution, and from that, 386 million Singapore dollars was actually distributed to unit holders. That's the real cash payout going into investors' pockets. And yes, payout they did. MIT distributed a total of 386 million Singapore dollars to unit holders for the year. Now, the key number for dividend investors, DPU, or dividend per unit, came in at 13.57 cents, which is a 1% increase from the previous year. In a high-interest rate environment where many REITs are struggling, MIT still managed to grow its payout slightly. That really says a lot about its financial stability and disciplined management. Chapter 6. Key Financial Metrics. Is MIT fairly priced? All right, let's zoom in on some of the numbers that matter to us as income investors. As of now, Mapletree Industrial Trust has a market cap of around 5.79 billion Singapore dollars. That's a solid mid-sized REIT. Not too small, not too huge, but definitely very established. Its price-to-earnings ratio sits at about 17.2 times, which is reasonable for a REIT with steady income and global exposure. The price-to-book ratio is around 1.2 times, meaning the market is valuing it just slightly above its net asset value. It's not in bargain bin territory, but also not in the overhyped zone either. Now, let's talk about debt. MIT's leverage ratio is 38.6%, which is comfortably below the MAS cap of 50% for REITs in Singapore. So, yes, MIT still has room to maneuver if it wants to raise funds for future growth or acquisitions. So, is MIT undervalued or overpriced right now? To be honest, it looks fairly valued. You're not getting a massive discount, but you're also not paying a premium. For long-term income investors, this might just be a sweet spot, a stable REIT with decent upside as rates cool off. Chapter 7. Dividend History and Yield. Is MIT paying you well? All right, so now let's get to the part many of you care about most. Dividends. Mapletree Industrial Trust has been paying quarterly dividends like clockwork. If you're looking for consistency, MIT really delivers. Each quarter, investors receive around 3.36 to 3.43 cents per unit, adding up to a full-year DPU of 13.57 cents. At the current share price of about $2.03, that gives us a dividend yield of around 6.6 to 6.9%. That's a pretty attractive yield, especially in today's market. For income-focused investors, whether you're using CPF, SRS, or just idle cash, MIT offers a steady passive income stream with decent upside if rates eventually fall. So, in short, if you enjoy regular, predictable payouts without the stress of stock picking or timing the market, MIT fits nicely into a long-term dividend portfolio. Chapter 8. Future Prospects. What's next for MIT? So, where is Mapletree Industrial Trust headed next? Let's talk about the good stuff first, the opportunities. First, MIT is riding the wave of a digital revolution. Data centers are hotter than ever thanks to the AI boom, cloud computing, and growing demand for digital infrastructure. And MIT has already positioned itself heavily in this space. Second, the Singapore side of the portfolio is doing well. Occupancy is up and rental reversions are positive, meaning MIT is actually collecting more rent when leases are renewed. That's always a good sign. And third, MIT is being proactive and smart with its portfolio. For example, It recently sold a U.S. property at 18.6% above valuation and used the money to pay down debt or reinvest wisely. That kind of asset recycling helps keep the REIT lean and financially fit. But of course, it's not all smooth sailing. On the challenge side, occupancy in the North American portfolio has dipped slightly. It's not a red flag yet, but definitely something to watch. And yes, the high interest rate environment is still a heavy burden. Like many REITs, MIT borrows to finance its assets, so higher rates mean higher borrowing costs, and that puts pressure on earnings and DPU. So overall, MIT's fundamentals are strong, and its forward strategy is aligned with digital trends. But like every REIT, it's not immune to short-term macroeconomic headwinds. Ready for the final part on interest rates and whether it's a good time to buy? Let's go! Chapter 9. Fed Interest Rates. What's the deal? You might be wondering, how on earth does the U.S. Federal Reserve impact a Singapore REIT like MIT? Well, here's the simple version. REITs borrow money to buy properties. So when interest rates go up, their borrowing costs rise, and that means less profit and less to distribute to unit holders. Now for the juicy bit. There's talk that the Fed might cut interest rates as early as July 2025. But nothing's locked in yet. Fed Chair Jerome Powell recently said they're holding off until they see how inflation and tariff pressures play out. So most analysts think rate cuts will come later in 2025 or even early 2026. But here's why this matters for MIT investors. If the Fed cuts rates, MIT's future borrowing costs will come down. That means higher net income, stronger DPU, and potentially a higher unit price. In other words, lower interest rates equals more money in your pocket over time. So keep an eye on the Fed, because it could quietly unlock more value in REITs like MIT. Final thoughts. Is MIT a good buy now? So, should you consider adding Mapletree Industrial Trust to your portfolio? If you're a Singapore investor looking for quarterly passive income, exposure to fast-growing sectors like data centers and digital infrastructure, and long-term stability with potential upside, then yes, MIT definitely deserves a spot on your watch list. It may not be screaming undervalued bargain, but what you're getting is resilience, predictable dividends, and the backing of a strong sponsor in the Mapletree Group. That's a pretty solid combo in today's uncertain market. Of course, no investment is risk-free. You'll want to keep an eye on occupancy levels in North America, especially for its data center assets, Fed interest rate decisions, because lower rates could boost MIT's margins, and how MIT manages its debt and refinancing in the coming quarters. But if you believe in the digital economy, and you're confident that interest rates will eventually ease, then slowly accumulating MIT while it's fairly valued could be a smart long-term move. Think of it as planting a dividend tree. Water it with patience, and it might just reward you with passive income for years to come. Enjoyed the video? Found it helpful? Then do us a big favor. Give this video a thumbs up so more Singaporeans like you can discover smart investing tips. And if you want to keep building your financial knowledge the easy way, subscribe to Wealth for You and hit that notification bell so you never miss our next video. We'd love to hear from you too. Are you buying MIT now or staying on the sidelines waiting for better entry? Drop your thoughts in the comments below. Thanks for watching, and as always, happy investing and stay cash flow positive.